Welcome to the deep dive. Today we're tackling something pretty big,
Yeah.
a potential full-blown trade war between the U.S. and China.
Yeah, it's definitely making headlines.
Exactly. Imagine the U.S. suddenly hits Chinese goods with a massive 125% tariff, and China just fires back with the same on U.S. stuff.
A huge escalation.
You're probably wondering, okay, what does that actually do globally? That's what we're diving into, using some sharp analysis from BBC Verify. We want to cut through the noise, get to the core issues, maybe find a few of those aha moments.
That's good.
So our mission today is pretty clear.
Mm-hmm.
Understand the current U.S.-China trade dynamic, get the specifics on these potential new tariffs, and trace the ripples across the global economy.
Right. And I think the first thing to really get our heads around is just the sheer scale of trade between them.
Okay.
Last year alone, the goods traded back and forth were worth around $585 billion.
Wow, $585 billion. That's huge.
It really is. It just underlines how deeply connected these two economies actually are.
Okay, so let's unpack that a bit. We hear a lot about trade deficits. The analysis mentions that, in 2024, the U.S. imported way more from China than it exported to China.
That's right.
About $440 billion in imports versus $145 billion in exports.
Which leaves that deficit you mentioned.
Yeah, a deficit for the U.S. of around $295 billion with China. Now, what's interesting is, while that's a lot like 1% of the U.S. economy, it's not the $1 trillion figure sometimes thrown around.
Exactly. Getting the actual numbers helps frame the situation properly. It's significant, but maybe not the number you hear in some headlines.
Right.
And, to really get why this 125% tariff idea is so dramatic, we need to remember this isn't starting from zero.
Good point. This has history.
Absolutely. The analysis points out, the Trump administration already put significant tariffs in place.
And Biden continued them, even added some.
Correct. So this potential hike is really layering on top of an already, let's say, tense trade environment.
Okay. And those earlier tariffs, they did have an impact, didn't they?
They did. The share of U.S. imports coming directly from China actually dropped.
From what, like 21% down to 13%?
Yeah, from 21% in 2016 to 13% last year. So on the surface, it looks like less reliance.
But there's always a but, isn't there?
Well, yeah, this is where it gets a bit more complex. Analysts see signs of rerouting, goods finding other ways in.
Rerouting. Okay, how does that work?
The analysis uses solar panels as a good example. The U.S. tax panels coming straight from China. So evidence suggests Chinese firms started doing the final assembly steps in places like Malaysia, Thailand, Cambodia, Vietnam.
So they finished them elsewhere.
And then shipped them to the U.S. from those countries, kind of bypassing the direct China tariff.
Like a global shell game, as I said before. The analysis mentioned tariffs on those other countries were paused.
That's right. These reciprocal tariffs, as they're sometimes called, were put on hold.
So what does that mean for, the average person? Those paused tariffs, even if not directly on China, they can still affect prices for stuff that ultimately started in China.
Potentially, yes. It just shows how tangled these supply chains are. A tariff here can have knock-on effects you don't immediately see.
Interconnected.
Very. And to really grasp the impact of a 125% tariff, we should look at what they actually trade.
Okay, yeah. What are the big items?
So for U.S. exports to China in 2024, a lot of soybeans.
Soybeans. Why so many?
Mostly to feed China's huge pig population, something like 440 million pigs.
Wow. Okay. What else?
Pharmaceuticals, petroleum products too, those are key U.S. exports.
And going the other way, China to the U.S.
Oh, tons of electronics, computers, toys, and importantly, a lot of batteries.
Batteries, right. For electric vehicles, I assume.
Exactly. Vital for the EV market. But here's a kicker. The single biggest import category from China. Smartphones.
Smartphones. Makes sense.
Yeah, 9% of total imports. And remember, many are made in China for U.S. companies. Think Apple.
Right. So these tariffs would hit those prices directly.
Absolutely. The analysis makes it clear consumers in both countries would feel this. We already saw prices go up with the existing 20% tariffs on some Chinese goods in the U.S.
And jumping from 20% to 125%, or even 145% for some things.
That price impact could be potentially 6 times bigger. And of course, China's retaliation means U.S. goods get much pricier for Chinese consumers, too.
But it's not just about tariffs, is it? The analysis mentions other weapons in this potential trade war.
Definitely not just tariffs. China, for example, has a lot of leverage because it dominates the refining of critical metals.
Like what? Copper,
Yes.
lithium?
Copper, lithium, those crucial rare earth elements needed for, well, lots of modern tech. Imagine if they restricted those exports to the U.S.
That would cause major disruption.
And there's precedent. The analysis reminds us Beijing already restricted exports of germanium and gallium.
What are those used for?
Things like military thermal imaging, radar systems. So they've shown they're willing to use that kind of control as a lever.
Okay. And the U.S. side, what levers do they have besides tariffs?
Well, they could tighten the screws on technology access for China.
The microchip restriction.
Yeah.
Making it harder for China to get those advanced chips.
Exactly. Chips needed for things like AI, which China is pushing hard on but still relies on imports for the most advanced ones. That's a serious pressure point.
Yeah, and there was another more aggressive tactic mentioned, something about other countries.
Yes, the analysis brings up a suggestion floated by Peter Navarro that the U.S. could pressure other countries, say Cambodia, Mexico, Vietnam, to stop trading with China by basically saying, if you want access to the U.S. market, you limit your trade with China.
Wow, that would be a major escalation, trying to isolate China economically.
A very significant move, yeah. It would ripple through the whole global trade system.
So let's zoom out then. If this full-scale thing happens, what are the global knock-on effects? Because it's clearly not just about the U.S. and China.
Absolutely not. These two economies combined are huge. Something like 43% of the global economy, according to the IMF.
Almost half the world's economy between them.
Pretty much. So if a trade war slows them down, or worse, causes a recession in one or both.
The rest of the world feels it.
Definitely. Global growth would likely take a hit. Investment could dry up. It's a scenario with broad negative consequences.
And what about China's massive trade surplus? You mentioned they export way more goods overall.
Yeah, their goods surplus is nearly $1 trillion.
$1 trillion. So the worry is, if the U.S. market slams shut with 125% tariffs,
Chinese companies might try to sell that excess production elsewhere, potentially flooding other markets with cheap goods, like steel, for instance.
that's dumping, right? Selling below cost.
Essentially, yes.
Yeah.
Or at least at artificially low prices to grab market share. UK Steel has already raised concerns about this possibility with steel.
And that sounds good for consumers, initially cheap stuff, but bad for local industries.
That's the double-edged sword. It can seriously undercut local producers in those other countries, potentially leading to job losses, hitting wages.
So it really shows how interconnected everything is. A fight between the two giants sends shockwaves everywhere.
Precisely. The general view among economists, as the analysis points out, is that the spillover effects globally would be, well, highly negative.
So the key takeaway here seems pretty clear. This potential trade escalation, it's way more than just tariffs. It could have really complex, far-reaching impacts way beyond just the U.S. and China.
Definitely. Which kind of leads to a thought for our listeners, maybe.
Yeah.
What other parts of daily life or other industries maybe might feel the effects that we haven't even touched on here? It's worth considering.
Good question. And how might businesses, or even just us as consumers, have to adapt if things really shift like this?
Yeah, how do you navigate that kind of change?
Lots to mull over. If you want to dig deeper, definitely explore more about how this global economy hangs together and the huge role trade plays.
It's a fascinating and critical topic.
Absolutely. Thanks for taking this deep dive with us today.